Fantastic. All right. Good morning, everybody. Kathy Carter here, and we're coming to you with the Tuesday's training. And we're doing a little pivot today from what originally was on the schedule. But I think you guys are going to love what we're doing. We have got Hans and his partners on here. He is with Oaktree Lending, or they're with Oaktree Lending. And I had a conversation with him last week, and he has just got some unique, or they, I should say, have some unique programs that really can help us in getting more deals for our clients. You know, most of y'all know I've been doing real estate for a long, long time. And what you may not know is a lot of what I built my business on is being very intentional and very knowledgeable in the lending world, you know, and understanding and knowing what programs are out there for your clients, because not everybody fits into a typical box, right? They're not all the 740 credit scores and you know, just check the box and they're in. And so the more we can know as agents about different options out there for our clients, the more houses you're going to sell. And that's what I wanted these guys to talk about today, about some different programs that aren't your normal programs that, you know, if you know these programs. Hans and I were talking last week, and he was like, agents that will know the things that we're doing as well, you know, as probably some things that other lenders are doing too. You guys could probably outsell 2 or 3 to 1 what, you know, the average agent sells. And so it is an important piece of your business. So I want you to, you know, pay attention today and pick up some tools. So Hans, I'm going to let you just do a brief introduction of yourself, and Bill, who is going to actually be presenting today. So I'm going to let you just do the intro, and we appreciate you guys being here and educating our clients on different ways and that they can get their clients approved under different programs.
Absolutely. Well, good morning, everyone. I hope you're doing well. We are Oaktree Funding. We're a pretty large bank. We've been around for a long time. We'll get into that. But I'm one of the top retail producers. And so all I do is talk to agents and investors all day. We pretty much have a full array of products, all the full doc options you already know about, but we're going to go through things like bank statement loans, DSCR loans. We have up to 8 unit capacity, which most lenders only do 4. So Bill Amato, he's actually the vice president of the company. He comes in on calls like this, and we really want to educate everyone on your options, because as Kathy mentioned, if you don't know that your self-employed borrower could qualify with bank statements, even though they don't qualify with taxes, you could lose that $800,000 home or whatever the deal is. So I can get people pre-approved very quickly and in very creative ways. And, we're always looking for more agents to educate and work. Partner.
And, you have to sit on the market like all the others, but it is priced right.
So, Bill, I don't know if you want to hop in and.
Yeah, I'll go through everything with you.
Sure.
Hello, everyone. How are you? So I'll just tell you a little bit about myself. I've been in the mortgage business since the mid-90s. I've done everything from owning my own broker shop to running a net branch to an executive. I decided to open up the branch for Oaktree Funding, their retail division, back during the pandemic, because I knew what was coming. Most cycles are 7 years in the mortgage business. So we're on that rising rate cycle currently. And without alternative products, you're not going to be able to succeed in the business, because everyone does the vanilla stuff. Most of the stuff that has been going on for the last 14 years has all been conventional FHA, VA, all government loans. It's been very few people that were in the market doing non-QM products. And non-QM products are basically just another version of subprime. So subprime was big in 2003, 2005, 2006, before the crash. They went away, and now they're back. Okay, and are these programs that we're going to go over today are targeted towards the self-employed borrower, the investor, those that have the money to buy properties now currently. So I'll get into it right now with you guys, and I'll share my screen. Give me a second.
I've been working on this all morning.
Can everyone see that?
Nope, nobody rush.
Can everyone see the screen?
Yes.
Awesome. Okay, great. Well, just a little bit about Oaktree's history. Let me scroll down here. Hold on. We've been around since 1989. So, we're a full service mortgage banker. We're very good at doing these products. We've been working on this for a very long time. So it's not something that's new to us. Some of the advantages that we have as a non-QM lender, not just doing the government stuff, is that we have an exception tree, which allows us to do some really unique stuff. For example, one of the big things that are happening right now are non-warrantable condos. What that means is they don't qualify for government financing for whatever reason. I mean, is anyone familiar with non-warrantable condos?
Yes. We've got some Florida agents on here too, who I'm sure are very familiar with those, sell a lot.
Right. So now that with the guidelines to tighten them up on condos so that, the associations don't qualify. There's too many investors. They don't have enough reserves, whatever the case is, we're able just to take that loan and flip it into a non-agency product and close it. We don't have to restart the file, and our rates are just as comparable. So if you've noticed what Fannie and Freddie have done in the last 2 years, is they've moved away from investment properties and second homes. They've put on LLPAs that are absolutely ridiculous, 4 or 5 points. So if you're actually going to qualify for it, you're going to pay for it. So you're going to see that a lot of the non-agency rates are better than the agency rates for those products. And if you don't have them, then you're not going to be competitive. So I just wanted to put that out there. So let's get into our locations. Oaktree is actually located in Arizona as our corporate office. We have one in Upland, California, and we are located here in Horsham, Pennsylvania, which is north of Philadelphia. Okay. I'm going to get into our.
Let me stop right there, Bill. So y'all lend in multiple states, though, not just those 3, right?
Yes, we're located in probably 34 states, 35 states right currently.
Okay.
Yeah.
Just wanted to verify because we got agents in all over different states. I know y'all do Florida, Tennessee, Colorado, Texas.
Yes.
So we've got agents from, in a lot of those states and maybe some others. So I just wanted to clarify you guys, are in those states too.
Not a problem. Okay, so one of the unique products that I want to go over is our blanket mortgage. The blanket mortgage is a perfect use for properties that are 150,000 and below. You can't normally do a DSCR loan for investment properties with below 150,000 loan size. So a lot of investors that have large portfolios will wrap up a whole bunch of mortgages in one. You can do them as a purchase and a refi combination if you have to. So I have some people that'll do 5 refis out of their house and 4 purchases at the same time. We can go up to 25 units. We don't do rural properties in this program, and it's DSCR based. And if you don't know what DSCR is, it's a debt service cover ratio. We're basically using the rents to qualify you for this program. Okay. We can go as low as 1 on the debt service ratio. I know it says 1.2 here, but we can go as low as 1. I'll just strip out of that 1 second. This program, I mean, it's excellent for places like Illinois and Indiana that have, smaller valued homes, but they have a large portfolios of them, the investors do. So we do a ton of those in that area as well. That'll lead me to the DSCR loans. Okay, so this is our debt service coverage ratio loan. This is for investment properties only. We do go up to 8 units. I know most people are capped at 4 units, but we can go up to 8 unit properties for investment purposes. And we can do as low as 0.75 DSCR, but now we have a no ratio DSCR. So we can do it below 0.75. You don't even need to qualify for that as long as the property's rented. Does anyone have any questions in regards to the DSCR loans?
Yeah, what is the difference between DSCR and debt to income ratio?
Debt to income ratio is when you're using your income to qualify. On this application, there's no employment and there's no income. You're just qualifying off the rents. So obviously, the higher your DSCR ratio is, the better rate's going to be. If you're no ratioing, obviously it's more of a risk. Your rates are going to be higher, and they start generally in the 7s and work their way up depending on LTV and credit score and your DSCR ratio itself. Does anyone
Okay.
else have any questions?
I
So
want to
these
chime
are
in
for-
on,
Oh,
good.
go ahead.
We'll
go ahead.
definitely get your question. I'm sorry.
I was just gonna say, these are great for your investors, people that are buying, Airbnbs. I mean, whether it be an Airbnb, whether it be just a long-term rental, to be able to, utilize the property versus the income, right? So if you're dealing with investors or people that, maybe again, they're 1099s and they don't show a lot of income, but their credit is a 620 or above, and it's going to be a rental property. This is a great loan option for those clients.
Right. We take a lot of people out of hard money with this as well.
So guys, previously, you're qualifying on the property with your own taxes, your own bank statements. We can do all that stuff too. But this is a way to qualify just with your credit score and that property's cash flow. So all we do is we send out the appraiser who's going to put the market rent down on that appraisal. And as long as that covers the proposed mortgage payment, whether it's cash out refi, rate and term refi, or a purchase in your cases, or a strategy to, pull cash out of an investor's portfolio so you can take that money and go buy 3 or 4 houses with you, it now takes the debt to income ratio off the table. We're not looking at your debt to income. You're not going to be capped at so many properties. After a while, you're pretty much capped at like 10 properties, full doc. You can buy unlimited properties with DSCR. And again, up to 8 units with our bank, which most places are 4. So that's a huge difference. So I do these all the time. I do them on luxury properties. I do them on investment properties, big Airbnbs. We can do up to $4 million loans. So, I mean, this is a way that real estate is really moving right now with the investors. Very streamlined, by the way. Credit check, appraisal. That's it. 21-day closes or less. So it's one of the most efficient loans that I can get people into properties with. Very little paperwork.
And people can do this on their personal homes, right? It doesn't have to be an investment property.
The SCR is strictly investment.
Oh, okay.
So, ultimately, if you're in a primary that maybe you're going to rent out and you're buying another property, to move to, then we can do a DSCR loan on that was your primary, kind of in conjunction with that transition, but it is strictly for investments.
Okay.
We have great alternates for primaries. We'll get into that, but DSCRs, it has to be an investment property.
Okay. And then Alex has his hand up. Alex, do you have a question?
Yes, thank you. How does this apply for foreign nationals? And is the loan amount 3 million like you show? I mean, the max loan amount of 3 or 4 million like you showed in the last slide? And lastly, yeah, those two. Oh, and how does it apply for pre-construction condos?
Sure.
Okay, so let me just take this one at a time. So foreign nationals would not qualify for that program. We're to get into our foreign national program. That'll be a little bit later on down the slide. We
But
can
do
go up
have
to,
foreign nationals are for primaries, but we do have an investor program for non-resident individuals as well, which would
Okay.
utilize these options, right, Bill?
yeah, but you wouldn't be able to do a DSCR with those.
Okay.
So just to give you, before I forget, we can go up to $4 million on those, yes. We don't do construction loans. We do have a sister company called Trolley that handles any of the construction stuff for us. So if you do calls on that, on a particular scenario, we would forward that over to our sister company. to
Sorry.
handle the program for.
My apologies. Pre-construction is in condos.
Okay, so are they built already?
No, we're groundbreaking. That's it.
Yeah, that would definitely be Truly. That wouldn't be us.
Okay, got
Well,
it.
I mean, it would be us. You would just send us the scenario and I would get you on the phone with our construction manager. But we do have a full array of production builder. That's for people that have done 30 or more, like big builders. Then we have spec homes that you have to qualify for by having 2 fix and flips that you've held title on and actually either sold or, can prove that you've rehabbed within the last 2 years. With that said, we do have excellent construction programs and we're working with builders all over the country, and ultimately we have these in products like DSCR products that once that construction or short-term money, whether you finance it through us or not, is due, or as soon as the project's built, then we'll just flip it to a 30 or 40 year DSCR program gets you out of the hard money, and now you're in a long-term strategy. And so we actually have interest-only options, which Bill will get into, which is, you know, really alleviating a lot of the debt issues on properties and freeing up more cash flow. So a lot of investors opt for interest only for a time period.
We also can close it up to a 4-person LLC with these DSCRs and a corporation. So if you have an LLC, you know, that's not going to be an issue for us at all. As long as you're 25% owner of the LLC. All right, I'm going to move on to the 1099 gross program. This program is excellent for realtors. We're going to take 1 year 1099. We're going to use the gross income with a 15% expense factor. We can use this to qualify for investment properties, second homes, and primaries. You know, most people that are 1099 borrowers don't generally show a whole lot of money to the government. That's just smart business. They write off everything on their taxes, so they could gross 250 and then, you know, only show 40,000 after the accountant gets a hold of the Schedule C. So this is a great program to get another option to get someone qualified to get them into either refinancing or purchasing a property. Okay. Anyone have any questions about this?
That's awesome.
Yeah, so it's very helpful. I mean, we're basically all the programs that we wrote the guidelines to and our investors buy were targeted to help the self-employed borrower. I mean, it really hasn't been much out there for self-employed individuals that are 1099 or own their own business for probably over 14 years. It's always.
So I have a question.
Go ahead.
Yeah, if somebody has a property that is maybe almost like a fixer upper, and the loan to value can cover the down payment, is that a good? Can you be able to work with that, or they have to have the down payment in cash?
Are you saying that you want a loan without a down payment?
Yeah, like let's say if the house is $200,000, but the loan that they're asking for is maybe like 120, and so the loan to value of the house can carry the
You
down
do
payment.
that on refinances, but you can't do that on purchases. So it's going to go off the purchase price or the appraised value, which is ever less. And you would have to put that money down. If you wanted to borrow 120, you would have to put the difference down, whatever that purchase price was. You can't use the equity on a purchase price. You can get seller's assistance from investment properties are 2%, and you know, primary and second home we can get away with 6%, but depending on the LTV and stuff. But yeah, there's no way to use the equity as down payment unless it's family to family. So if you were going to buy a property from your family, a primary, you could use a gift of equity in that case. But that's the only case that we have a program for. Did I answer your question?
Yeah, I think so.
Okay. Anyone else have a question?
Also, anyone is free to do a consultation with me or Bill, or I mean, whoever, our team after this meeting. I mean, feel free to reach out and we'll get into scenarios and give you my cell phone number, you know, whatever you need.
All right, I'm going to jump into our bank statement programs because we have some kind of unique stuff for our bank statement programs. We have a 2-month bank statement program with a CPA letter. Let's say that you were self-employed and you had a really rough year last year, but you're doing well this year. We can use a 2-month bank statement program to get you qualified. We also have a 12-month bank statement program and a 24-month bank statement program. This is just another way to get someone into a primary or second home or investment property to get them a better rate because we're using income documentation to qualify, and we're going off the deposits. We don't care how much comes in and goes out. We just care about how much they're depositing each month on an average.
And this is for primaries as well as investments. So this is one of the unique products that if someone doesn't qualify for on W-2s, maybe they write a lot off, they depreciate, you know, they don't show Uncle Sam half the money, but with bank statements, now your client, instead of qualifying for a $300,000 home, I can send you a pre-approval in 24 hours or less for $700,000. We can get them exponentially higher or whatever the case is, because they're not using those write-offs. I mean, does that make sense, everyone? It's much,
Yeah.
and you can also use business statements. So let's say we have guys that own like 50 properties, whatever it is, or a construction business. Doesn't matter what the business is. If you show ownership in that business, we can use, if the most cash flow is through the business accounts, we want to look at whatever account, personal or business, has the most cash flow. Okay. So we
And
have,
I know it says up to 3 bank accounts, but we get exceptions to go much higher than that. We've used 4 or 5 bank accounts, and that's not a problem. The deposit notice, because some investors have bank accounts for separate properties. Some of them have multiple businesses. So we mix it up.
So what would be the scenario that somebody would use the bank statement program over the 1099 program?
The 1099 program, they don't qualify. So we take the path of least resistance. So, you know, Hans's job is to get a complete application and get all the documentation. And then we just walk backwards on how we're going to get that person into the property.
Oh, maybe it wasn't 1099, maybe it's another one.
1099 is, well, you don't have to show bank statements when you have the 1099 program. Let me just pull it up for you. That's our 1099. So you're just showing 1 year 1099.
1 year, okay. That was based on 1 year. Okay, gotcha. And then the bank statement, that one's just showing deposits. not the
Deposits, right? And
1099.
usually that's a lot higher. So if you have multiple businesses, you can show a lot more income and qualify for a bigger home.
Yeah,
So that's why we'll go down the bank statement route.
I gotcha.
I had a realtor call me and say that his client was declined. This guy has 3 different businesses. He shows a loss in one of the businesses. I think it might have been strategic. I don't know. But the regular, you know, local lender, his credit union, the banks told him because he had a loss in one of his businesses that now he can't buy this $1 million house. He literally does not qualify for a loan. Well, we got his 12 bank statements, and the man had $400,000 a month deposited in from his car garage that he owns, big service center, and he had that pre-approval, and that realtor made that sale from those bank statements. Otherwise, he would have just moved on to the next client.
Absolutely.
Actually, he would have believed that his client was ineligible for a loan.
Yeah.
I'm going to run into the next program I want to cover with you guys is asset depletion. Has anyone ever heard of asset depletion?
No.
No.
Okay, so there's asset depletion and asset utilization programs. This is perfect program for individuals that have, and it's primary residence only, but it's great for people that have a ton of money in the bank but have no stream of income at all. So we can go up to 60 months. We'll qualify them as 60-month average on their income monthly. So let's say they have $2 million in the bank. We'll take that $2 million and go take it over 60 months, and that's our monthly income. And that's how we qualified a bunch of borrowers to do refinances and some purchases. Now, asset utilization, which I don't have a slide for, it's typically a new program. You just have to have enough assets to cover the mortgage amount. So it's a minimum of $400,000, but let's say you have $750,000 in assets and you want to buy a $500,000 house. That's not a problem because it covers the amount of the mortgage. Plus you have to do 5 years of monthly bills. So they'll take the credit report, add up the monthly bills times 5, that plus the property. As long as you have enough assets, we'll qualify you on that. And so it's different techniques to get people into properties. These asset utilization and asset depletion hasn't been around that much. I've only used it in the last couple of years, probably 4 or 5 times for people that qualify, but they couldn't qualify anywhere else. So it's a great program. Does anybody have any questions on this?
And by the way, it doesn't lean their asset or anything. So if someone has a big IRA, 401k, money in the bank, stock options, they basically do a mathematical equation, like Bill said, off of that number, but their 401k is not at risk if, you know, they foreclose on the property, because one, they don't have to foreclose because we've proven they have the assets they can liquidate to make the payments, right? So, you know, it's a really neat, option. Second homes, retired people, Florida, big, North Carolina, the Outer Banks, Colorado, Tennessee, and the Sevier County. I do a ton of short-term rentals out there. I mean, you name it, guys. I'm in all the hot markets. Okay, so I've sold so many second homes for retirees that thought they didn't qualify because again, they don't show income, but they have a lifetime of assets they're sitting on. And they went to their local bank, shot them down. The realtor thinks they're not qualified. And then I talked to that realtor and I'm like, no, I can get that guy a $2 million beachfront home because, of the equations that we ran on his assets. Sure enough, deal goes through and we have a lifelong, realtor partner now because it's, a rare opportunity.
All right, I'm going to move on to the I-10 program. We're allowing DACA as well in this program. If you look at it, it's kind of restrictive. Max LTV is 80%, 740 credit score. Maximum loan size is 1.5 million. Primary residence only, no non-warrantable condos, this program. So we do offer it, but it is limited. So if you do fit that criteria, we can take care of that for you. Does anyone have any questions in regards to the program?
It's actually how I broke into Tennessee. I had a realtor call me out of nowhere and said that the deal is supposed to fund in 2 days, and the bank shot him down when they found out that it was a non-warrantable condo. It was like a condo tell. Okay. And so literally we fast tracked the DSCR loan, was able to, put it through without any
My name's
hiccup.
Suzanne Hogan. I have a property with
So-
you guys. I received
All right.
I missed that one.
Keep going, sorry.
No, no worries.
Muted him.
All right, I'm going to move on to our foreign national program. So foreign national, there's a list that we have of countries that we can do and we can't do. I didn't actually bring that here, but we can go up to 75 LTV, and it does show that we can do the DSCR here. So that's probably something new for us, up to 0.75 DSCR ratio for foreign nationals. Loan amounts up to 1.5 million. Bars, there's no US credit needed, but there's letters of reference from the country of origin required. So, and any of the documentation that you do on a foreign national has to be translated through a professional translator in the United States. So that is unique to the foreign national program. Does anyone have any questions in regards to foreign national? I know someone was asking about it earlier.
Yeah, that was me. Thank you for pointing this out. Does this going back to what Hans said, and I forgot to ask earlier, does this apply for condotels? And can you tell me a little bit more about condotels, unless you're getting to that in a moment?
Condotels, we have one investor that'll do condotels. Condotels, I've never been able to do a condotel in my career until I came to Oaktree, because it's very limited individuals that want condotels. So we do have one investor that does the condotel. I'm not 100% sure, and I can get back to Hans after the meeting and ask that question, whether that investor will do a condotel for a national. That's one we'll have to take away, and I'll follow up with Hans after the meeting, and he can send a message to you guys and let you know on that. Okay.
Okay, thank you.
Anyone else have any other questions in regards to the foreign national program? Okay, I want to jump into what our sister company does, and Hans, you could probably talk more about this than I could. The short-term lending, the fix and flips, and what Truly actually does.
Sure. So we partnered, we actually purchased the company, but we have a really serious expert in the fix and flip and the construction loan, side of the business. As far as qualifying, you do need to qualify. So you need to have proof, again, that you have 2 fix and flips under your belt within 2 years in order to qualify for this. Depending on your experience level, you may be able to get in with as little as 15% down. And then again, we have the exit strategies to where as soon as that property is, rehab, upgraded, whatever it is, we have the DSCR loans and things like that. Now, the rates are higher. You're looking at anywhere between 11 and 12%. on the short-term money. It's interest only. You're only going to take, that interest on the draw, depending on the phase of the project you're in, especially on the construction loans. You take them in draws. You have to verify the work's complete and get your next draw. So you're only accruing interest on what you're drawing at any given time. It's a really good product. But as long as a home is inhabitable, we don't have, dangerous issues going on, and the boiler's not on, the heat's not on. As long as it's inhabitable, you might find it easier to do a DSCR loan and then, find another way, whether we look at a cash out refi with a lower rate or whatever the case is, to do the rehab money instead of having to, depending on how extensive of a project it is, going right for the higher interest rate rehab, unless it's like a dilapidated mess or it's a full-on construction project and it absolutely needs that product. Great. But I've saved a lot of people from having to go to that product by just getting a DSCR loan and figuring out how to come up with the 50,000, 20,000 for those products. Now, we do have production builder programs eligible for people that have done 30 actual builds in the last, I think it goes back 3 years in that case. Okay. Does anyone work with builders or is connected or has buyers wanting to buy from a builder right now? Not so much. Okay. So the bottom line is we have a product for just about everybody. If those scenarios come up or you're talking to a builder or someone wants to buy from a new construction, lot, talk to us. We have some things we can go over. Okay.
Yeah, and I want to add something to that. We do bridge loans for investment properties. So if you have someone who's trying to sell their property and they're looking to purchase another property, but they can't get it sold in time, we do have bridge loans. We can go up to 70 LTV on those bridge loans, 1 to 4 unit properties. Maximum loan size is 2.5 million. So that's, everyone familiar with a bridge loan? That's when you can't sell your property and you need to get the funding for the new property. So we do have those. It's a 12-month term, interest only. Okay.
And depending on your market, guys, is anyone like truly in luxury or does, multi-million-dollar deals? Because I've kind of made a brand for myself, in some of those luxury markets. The reason being is that most brokers can only do up to 2 to 2.5 million per unit. I don't know what it is, but when you're labeled a broker, the banks, the investors kind of cap you at that loan amount. We can go up to 4 million, 3 million, depending on the product, and then get an exception beyond that. So we can do much larger deals and up to 8 units. That sometimes really makes a difference rather than going to a broker, because we are the money. If Bill didn't explain, we're the bank. We actually do 200 million a month in our own funding. You can look at our corporate office in Chandler, Arizona. It's gorgeous, big glass, extremely nice facility. But the bank issues the, money. It's our money. We have all our underwriters in-house. Everything's streamlined. We can get it done right here without having a daisy chain of brokers. And then ultimately down the road, the investor, big Wall Street firms, hedge funds, they come through and they buy the loans from us and replenish the cash. But you're working with a direct lender, which is why we have 21-day or closes or less on these deals. Seamless transactions. I mean, there's people in this room that know people we've just done deals with. I did a primary in Tennessee on another realtor's, place. And great experience because everything's in-house, everything's controlled and managed. And depending on your state as well, guys, if you have a really good appraiser that you're working with, we can also order directly depending on if the state allows it, talk to us, or we can try to get them into our AMA if you have like a rock star that you want, in your area to use. So.
Yeah, so I covered all the unique programs that we need to cover for this call. I'm not going to waste your time on the conventional and the FHA. We've done all that for the last 14 years.
Well, hold on. Let's chime in real quick though, guys. I'm sure most of you know, or maybe you don't. FHA, which we do have, and we have jumbo FHA, did on the 17th of this month make an exception on multifamily up to 4 unit conventional. Basically, you have to be owner occupied, only 5% down now. It used to be 15 to 20%, scenario depending. Now your client can get into a 4 unit, live in one of the units, and only put, 5% down, which, you know, is going to open the door to a whole world of people that don't have 15 or 20. So don't just think of us as the hard to do crazy loans. We have all the full funding as well. FHA, VA, we do a lot of VA deals. You name it, we have it, and then we have all this other stuff.
Yeah, so I covered everything. Does anyone have any questions for me in regards to any of these programs or products?
Yeah, I have another question. If somebody is working on a property that it doesn't have a history of cash flow, but they have a business plan that can show that it will cash flow, is that an option?
Well, if they don't need to have a history of cash flow, if it's an investment property, we would just need a lease showing that they're renting the property out, and we can go as low as, we can do no ratio DSCR, so we could definitely get that person qualified. That's a conversation you want to have with Hans after the call.
Yeah, I welcome any and all scenarios. It's what I do all day, guys. So I'm either on the phone with a realtor or an investor from morning to night.
All right, anyone else have any questions?
So does the lease amount have to just cover the payment, or is that to be a percentage above what the payment is?
It's actually, we have a wide range, so we can do no ratio. That means it can be below 0.75. You can do 0.75 to 0.99. You can do 1 to 1.2 and 1.2 to 1.5 is all different DSCR ratios. You know, higher you go, the better the rate.
Yeah.
But we can get you qualified.
It's basically the rent divided by the mortgage, guys. But we'll figure it out and make it work and look at different options. You don't have to be an expert in it, but you know, let's say you have $5,000 a month coming in on rent, and the proposed mortgage payment's $4,500 on that property. That's a 1.1. Okay. So as long as it's in that range, that one range or a little above, that's what they mean by ratioing. So you're going to divide your rent by the mortgage, but don't try to just like say, oh, this one doesn't ratio. Call us. We can possibly make it ratio or flip it to that no ratio option, which obviously is going to be a little bit higher in points and fees, but will still get you in the property. Okay.
Tracy had a question in there. She said DPAs too, and then do you guys have or provide down payment assistance options to buyers that may need it?
There's no down payment assistance programs. I mean, you can get your local programs, but we don't have any specific ones that we, as a bank, that we do. No. What was the other one? I'm sorry, what was the other question?
You said DPAs too, question mark.
DPAs would be local to your area, I'm assuming. So like for example, Philadelphia has a $15,000 grant that they give out. So it would be local to the area, and we do accept them. It depends on what they are. As long as we're not FDIC ones.
Yeah, I understand USDA may have some, but I didn't know some lenders have in-house down payment assistance, so just wondering.
Okay, yeah, we don't have that.
Okay, no problem.
We can find creative ways. You might be surprised on making deals work, but yeah.
Sounds great.
Awesome. Well, guys, my email and my cell phone is in here in the chat. You know, feel free, again, please reach out, scenarios, or just wanting to make a connection. We're going to, you know, I guess Kathy's going to put this on the platform that you guys have, but we're also going to send the PDF that we walked through. We'll get that in your hands as well, or we can email that directly to you. So you can kind of just quick reference the products. We're also always coming out with new products and new things. So we'll keep you up, you know, to speed on those things as they transpire and as rates come up and down and we evolve with this crazy market. But again, my whole job is to make you guys more sales. And I really appreciate your time today. Thanks, Kathy, for setting this up.
You're welcome. Does anybody, before we wrap up, does anybody else have any final questions? You know, one thing I'll say, as I started with, is it's just knowing all these different options and having all these different connections that are just going to help you in your sales. You know, it's don't just let somebody, you know, if you have your favorite lender and they say, hey, they can't qualify, just at least, throw it to these guys, let them see if one of their unique programs can get them qualified, because I'm sure they just have many, many stories on Hans has already told a couple, right? Where they were told they couldn't buy, and then one of these unique programs afforded them the opportunity to, get into a home. So it's about just having all these different tools in our tool belt so that we can just sell more homes.
Absolutely. And guys, just like we're on this call with a bunch of realtors in the same group, I have realtors in multiple offices, whether it's EXP, Keller Williams, whatever brand they have. What they'll do if they really want to fast track, or they work with a lot of investors, they'll either get them in a room, or we'll just do a virtual call with that realtor's investors. And I promise you, when the light bulbs go off, well, I'm 1099. I thought I had to wait another year. Or I didn't know I could buy that property with DSCR or bank statement. Oh, that was a non-warrantable condo. We can do that. Next thing you know, that realtor is having, a bombardment of sales coming down the pike because they were savvy enough to get investors together. So any one of you, I promise, we will make the time. We did it one at 10 o'clock p.m. our time. It was West Coast. They wanted a later time the other night for, it was actually a Keller Williams sports and entertainment, Los Angeles, big stuff, big players, like real celebrities. But that agent is going to be selling multiple multi-million-dollar homes from that event we threw. So we'll do that in subgroups for you. However we can, help you guys succeed, whether you want to do that, three-way call to your client, one-on-ones, whatever you want to do as the agent, we'll help you facilitate. And some of it might be, location depending. They might do something that's different in North Carolina than you do in Florida, or whatever your environment is, we'll adapt to that and get you guys, armed up, and get your people armed up with this info.
Good deal.
I'll speak up just,
go
yes,
ahead.
I'll just speak up. So I'm in the process of working with Hans right now, and his team has done an excellent job. They are very quick, efficient. They answered all of the questions. And I have a scenario where if it weren't for Hans and his team, I probably wouldn't be able to get this situation handled. And it's a personal loan for myself and some of my investments. So I just want to say for him, he's just done a great job educating me, and the quick efficient, response to what I had questions about has been amazing. So and again, he closed out a great friend of mine's transaction, which is, again, just wanted to give him some props because he's done an excellent job for me so far.
Thanks, Adrian. And yeah, that was another realtor, again, in Tennessee. So we do a lot of work with realtors.
Okay.
Awesome. Thank you.
Does anybody have any other questions or scenarios? Maybe if you have specific scenarios, just reach out to Hans. Like you said, his email, his phone number is in there. But just keep these guys, in your phone, and don't let your clients that maybe have been turned down locally, don't let them just go without at least giving them a shot to see, again, if one of their unique programs could be a fit for your client.
Yeah, if you shoot me a text, I'll send you my contact card right away. There's no off times, guys. Again, nights, weekends, it really doesn't matter. I'm here to support, a group of agents that are really serious about, in this time, getting through this tough time that we're in. And it is tough. We know the market's hard right now, but it's weatherable, it's doable. We can totally do this together, and we have these options so we can get through this. And when it's like shooting fish in a barrel again. Those of us that survived, it will be, all the more sweet, right? Yeah. So we'll get there together.
Well, like Tracy said, it makes a huge difference when you have the right team around you. And so can't agree with that statement more, for sure.
Awesome. All
righty, guys. Well, if nobody has any other questions, we're going to finish a little bit early today. Again, reach out to them if you want to run a scenario by them. And I hope y'all have a wonderful Thanksgiving coming up. So enjoy that, and we'll see you guys next week. Thanks again, Hans and Bill, for your time and your information.
Thanks, Kathy.
Thank you.
Have a great,
all right,
great day, everyone. All right,
y'all have a great holiday. Bye, everybody.
Thank you.
Thanks. Bye-bye.
Bye.